live and tell you a bit of a customer story that will help you with a topic. First, I'm going to give you a book to read, which I think is really, really powerful book. And this will kind of cascade down from the customer story. So the book is Mike Michalowicz's Profit First. Now, this book, I'm sure it's at least 5 years old, might even be 10 years old. I'm hearing it get a bit of a resurgence. It's starting to get traction again on podcasts. I'm hearing people talk about it again. Let me kind of give you the Cliff Notes or Coles Notes, depending on which country you live in. Think of it as instead of going revenue minus expenses equals profit. The difference between bookkeeping or corporate accounting profit and what actually ends up in your bank account are two wildly different things because of deferred revenue and all these sort of things. So what happens is founders feel like, but at the end of the year, where's my profit? Where's my take? So the concept of the profit first is as $100 comes in, it starts splitting automatically into certain bank accounts. It's automatically a portion goes into your tax account and one into your partner profit account and one into your growth and R&D account. And what's left is actually, so it's thinking in profit first minus revenue. You have to live within these expenses. That's kind of the concept. So I wanted to kind of give you that book first. Now, with that, I was with a customer last week and we were talking about changes that were happening in their business. They talked about how they identified there were redundancies in certain roles. And I asked, oh, great. So you went through a zero-based budgeting exercise. And they asked, what is zero-based budgeting? And I thought for myself, okay, so that means that this book and topics like zero-based budgeting, and I'm going to introduce you to another concept called operating leverage benchmarking. Well, it's not as pervasive as us founders might think it is. So let me kind of help how this works. Here's the situation. What happens is we're just about to finish a year. And right now, as a founder, as a CEO, you're writing your business plan for next year. What typically happens is you take your P&L and your real-time cash flow report that you built the beginning of the year, and you port over the numbers, and then you start to adjust. Do we go up with an expense, down with an expense, and so forth? And what that does is it takes a legacy bias from the past and ports it over to the future. And this is how mid-market and enterprise companies end up with multiple CRMs and redundant employees and two insurance policies that are exactly the same. And because what happens is an additive approach that unfortunately we forget to take away sometimes, or we're not objective about asking ourselves the why. Like, why do we even have that expense at the beginning? So here is kind of the challenge or the opportunity. The challenge is, as us founders, we end up having bloat and rot in our businesses. And it starts to metastasize to the point where we wonder, like, how do we get rid of these things? And when it comes to talent, when it comes to human capital, North American human capital, with it comes an enormous cost of a deferred liability around severance. And so what happens is you end up employing people. You get excited when the times are great. You hire for this role and that role and this role and that role. And all of a sudden, what happens is you're not using what's called the cupboard theory. I'm going to pause for a second and describe the cupboard theory. The cupboard theory is, I want you to picture you live in a home that has 4 cupboards filled with pots and pans. You end up moving to a bigger home. That home has 8 cupboards. You move all your pots and pans in, and for whatever reason, the same amount of pots and pans end up fitting in the 8 cupboards. And you wonder, how's this possible? We have double the space, yet we have the same capacity. All you did is you separated out the pots and pans a little bit further apart from each other. And what ends up happening, you don't end up with any more room. Employment works the exact same way. You give people tasks, they start to stretch the timelines it takes to do something. They don't do as many task projects and responsibilities. You create overlap. And what happens is one person is taking an entire week to do something that could have been done in a half a week. Okay. So what ends up happening is you have redundancy, people doing the same things or could have been doing the same things. And now you want to use zero-based budgeting. Here's what zero-based budgeting is. You're creating your 2024 P&L. And in that P&L, you actually take the entire spreadsheet and you make it zero. Zero across the board. Every line item, from operational expenses to human capital to sales and marketing expenses, to cost of goods sold and cost of delivery. And now you're pretending like you never had a single employee, a single tool, real estate, anything. And you go ledger by ledger, and you have a discussion with yourself, your business partner, your stakeholders, and you ask yourself, if you were starting this business all over again today, would you even have this expense? Would you bear any expense? Forget the person that is in that role. Would you even have that role to begin with? What ends up happening a lot of times is the answer, when you're really objective about it, the answer is no. And so what ends up happening in the rules and the laws of zero-based budgeting is you start to discover there are potentially people. So we call them the 4 R's. There's replace, replicate, and so forth. I won't go through those 4 R's right now, but you start to recognize that there are people, tools, insurance policies, real estate, all kinds of things that are redundant. Now, if I pulled up the book that I just wrote, Outsource to Profits, I actually talk about in zero-based budgeting. We now do, I started this 6-7 years ago, every 90 days we do this. And every 90 days, I'm making a cut to a tool. I'm making, unfortunately, a cut maybe to a person. I'm making cuts because I recognize that in the heat of growth, we get really excited about this concept of adding. But I've woken up, and here are just some of the things that I found. I had 2 insurance policies for an office I didn't have anymore. I had an office, didn't need it. Nobody went in. Beautiful 2,000 square foot office, Midtown Toronto, whiteboard walls, glass patio. Nobody went. I had CRM licenses in a multi-year agreement for people that didn't use it. Navigator licenses for people that didn't even work in the company. I had multiple people doing the same job. And if I had been objective about fractionalizing each role instead of automatically triggering full-time employment, there were many roles that were actually fractional that I was paying full-time. And with that comes the severance on the back end. So the concept of zero-based budgeting is, as you're creating your business plan for 2024, what you actually want to do is take the ledgers, the list of expenses, the categories, right? Bookkeeping, travel, role 1, role 2. First, have the argument when it comes to human capital pertaining to get leverage here. Number 1, if you had a time machine, would you have created this role to begin with? Or could you have asked somebody that already existed to do this role? If yes, you would do it. Great. Can it be done in 20 hours a week, these specific tasks? If so, that's another question to ask yourself. Or does it need to be full-time? Then ask yourself the fundamental question. Does that person need to live in the same city and come into our office 40 hours a week to do this job? Because if you ask yourself, and if you look really objectively at yourself over what you learned during COVID, and the answer is no, you say, well, could they live on the other side of the country? Can they live in another country? Because when you ask yourself these fundamental questions, what you start to discover is that, I'll give you a real life example, your social media manager, you say to yourself, well, the opportunity cost of me paying $6,000 a month here in North America for that role, I could have that done while I sleep, the exact same role being executed in the exact same way for $600 a month in a different part of the world. Now, the opportunity cost is I just bought myself $5,400 a month in profit. And at 20% EBITDA, that's like $25,000 a month in headwind in sales, I don't have to chase anymore to achieve the same $5,400 in profit. That's dramatic. That's more than $250,000 a year. So using zero-based budgeting, you go through all of these line items between people, tools, real estate, and you start to discover every 90 days that there are these elements that you could potentially remove. So that's zero-based budgeting. What I highly recommend then is you intermix that into a process we like to call operating leverage benchmarking. And the concept here and where you can get this is, I'm sharing my screen here, where you go on the website, and on the website, if you go under free resources, you go to benchmark your talent costs. What that allows you to do is it gives you a spreadsheet called the operating leverage benchmarking tool that helps you empirically evaluate if you were willing to make changes. You put zeros in your zero-based budgeting line item, and you're now arguing for any spend. Be objective. Does that spend need to be, as in the example that I used, in your social media manager instead of $6,000 a month? That same equivalent, as an example, was $750 a month in Bangladesh. What that does is create $63,000 of profit in a 20% EBITDA business and $315,000 less in revenue you need to chase to capture the same profit. And this exercise go hand in hand. Zero-based budgeting, thinking zeros, arguing in rather than porting over. Now, in arguing in, you're objectively analyzing talent costs from the lens of, well, return on investment here at 10x the savings offshore for my sales and marketing support. What can that do for my business? And now, rather than just because you like a person or because you like the situation, you automatically port over the expense, you are much more objective about analyzing it. So with that, I've been going live here for, I don't know, about 10 minutes or 12 minutes or so. I don't see any questions in the chat function so far. So what I thought I'd do is I'll sign out. Hope that this was valuable for you, and really looking forward to our next session. You take care.